There are a number of Ohio changes that you should plan for as well, including those as a result of the recent budget bill. First, the repeal of the Ohio estate tax. That is applicable for estates of individuals dying on or after January 1st, 2013. The legislation also requires that all claims and inquiries regarding the Ohio estate tax, that be submitted to the Ohio Department of Taxation before 2013. Another item is the enactment of 2 amnesty programs. Very, very pro-taxpayer here. Ohio is encouraging delinquent taxpayers to come forward and pay their delinquent taxes during 2 different periods. First is the use tax amnesty program. It specifically deals with consumer use tax accounts and filings. That started already, and it goes till May 1st of 2013. What the Department of Taxation is encouraging is any businesses that have Ohio purchases, that if they are delinquent in their consumer use tax obligation, as well as if they are not registered for consumer use tax purposes, to come forward under amnesty and take care of those liabilities. Very taxpayer friendly. There's no the look back starts from January 1st of 2009. There's no interest or penalties associated, and there are even payment plans available. For the general tax amnesty program, this is much more broader based. It includes all of Ohio, or a significant more Ohio taxes, including sales and use tax, commercial activity tax, corporate franchise tax. This doesn't start until it opens May 1st, and it's only open for a 45-day period next year in 2012. As part of the budget bill, it creates a non-refundable small business investment credit. This is called Invest Ohio. There's certain criteria that need to be met by a small business, including the number of employees. It needs to either be 50 employees or less, or more than 1/2 of their Ohio employees are located in Ohio. Either assets of $50 million or less, or the other criteria would be sales of $10 million or less. And the eligible investments must be made on or after July 1st of 2011. Now, this credit would be equal to 10% of the qualifying investment, and unused credits are able to be carried forward for 7 years. And the last is the taxpayers are limited to $1 million in credits for qualifying investment made in any fiscal year biennium. Another item is the budget bill created a new job retention tax credit. This credit is refundable, and it's a credit against the CAT, the corporate franchise tax, the personal income tax, and may be granted on or after July 1st of 2011, but before January 1st, 2014. To be eligible for the credit, the business must have a total annual payroll of at least $20 million, invest a minimum of $5 million at the project site, and there are other criteria and eligibility requirements that need to be met. But again, this is very taxpayer friendly. It's refundable versus the Invest Ohio credit is a non-refundable credit. The credit can be claimed over 15 years, subject to the terms of the individual income tax credit agreement. Last item is the historical building rehabilitation credit. This has been extended. Otherwise, prior to the budget bill, it would have ceased as of July or June 30th of this year. Next, Bob.
Thanks, Julie. A couple other items for Ohio. The Department of Taxation closed 7 district offices this year. On its face, that doesn't seem very important, other than what we believe the impact will be. Our sources basically have told us that many of the employees that were working at these service centers are now being transitioned into the audit group. So if you combine that with the amnesty periods that Julie talked about, the expectation is when those amnesties are over, there's going to be a significant increase in audit activity using all these new employees that will be up and running and fully trained by then. Another item is a tax division alert that came out regarding pass-through entity tax returns. Essentially, for non-resident individuals that were included in a composite tax return filing, this alert discusses when they may or may not file an individual income tax return in Ohio and take a credit for that tax paid on behalf of that individual on the composite return. The composite tax return is a binding election. What's important to determine here is whether or not the individual is going to be better served to file a return directly or for convenience be included in a composite return. If the taxpayer has no other income from Ohio and was already included in a composite return, it may not file a individual tax return and claim that credit. Therefore, planning should be done in the forefront to determine if the composite filing is the right tax method to file and pay the taxes, or whether or not they should file individually. There are other items that are out here, are pass-through entity audit tax issues that we're seeing significantly in the marketplace right now. First item is gain recognized by a greater than 20% member. Generally, when an individual sells their membership interest in a pass-through, that gain, if any, is recorded as a capital gain and is cited to their non-resident state. For example, if an individual lives in Florida, sells a business, that gain is going to be taxed in Florida, or in that case, because Florida has no tax, it will be avoided gain completely. Ohio, with pass-through entities, if the business operates in Ohio and the individual owns greater than 20%, they actually treat that gain as apportionable business income. And therefore, although the person may have moved from Ohio to Florida thinking that they were going to avoid gain completely, Ohio is going to take the position that that gain is apportionable business income and will be taxable in Ohio. Other items that we've seen are related member add-back adjustments on pass-through returns. If an individual has greater than 40% ownership interest, either direct or indirect, then any items paid to related members are being added back. This could include family member salary, etc. So if you employ your son in a business or your daughter, they're looking at that as an add back to the apportionable business income. This also is an item that you see with the compensation add back in pass-through entities, where an individual who owns 20% or more, their salary must be added back to the pass-through income and apportioned to Ohio. One other item that is out there right now available for 2011 is the Ohio Commercial Activity Tax Voluntary Disclosure. It has a 3-year look back, and it does charge interest but avoids all penalties.